man to a painful red day for crypto markets as Bitcoin tumbles 2% in a sea of red. What is going on? Yesterday we spoke about this symmetrical triangle pattern. Everybody was talking about how it's breaking out, and this is what we said in yesterday's video. Do I think that's going to happen? It's very difficult. We are against the trend right here, and we need to understand what's going on. Now, I'm going to zoom out on the bigger time frames to give you some perspective, because on the bigger time frames, we're still in a downward trend, right? Lower highs, we've seen that. But on the shorter time frame, you need to understand that when you have a triangle like this, what can happen? Just like we've shown you, when you fake out to the downside, you can move to the upside. Yes, that can happen. But you can also have a retest. Maybe it wants to retest before then trying to go higher. Okay, that's one option. The other option, it could do something like this, liquidate all the over-eager longs that start to take positions today because they're like, oh, look, we're breaking out, we're going to 29,000, and it could start trending back to the downside. So be very, very careful of these fake outs. As you can see, exactly what we said had played out. It was a fake out to the upside, curled over, failed the retest, and now sits back at the pivot point, sitting here to the left-hand side, $26.7 thousand. The question now is, where are we heading from here? Could we be heading to lower price targets? Are we ready for a bigger move to the upside? There is loads going on in this market right now. First and foremost, you've got to be prepared for Janet Yellen, who's speaking any moment today. She will be speaking. Will she have an impact on the market? Will she talk about economic growth? Will she talk about the debt ceiling and how close we're getting? Remember, this is the main theme of what's going on right now, is this debt ceiling issue. Now, I know that you and I and the majority of people in the world know that this debt ceiling negotiation will be passed. We know that the ceiling is going to be increased. It's like a slight, tiny, minuscule percent that they don't raise the debt ceiling. But the problem is, markets don't like uncertainty. And that's the problem right now. Until they have that certainty, do not expect a pump to the upside here. So what we're going to be seeing now is, what are these price targets to the downside? Well, first and foremost, you can see we're sitting here at this first pivot point, granted. Then you look to the left and look at where's the other support coming in. You've got a little bit at 26.5. After that, you're looking at 26.2. Okay, that's the first level here on the orange line. But moving beyond that, when we jump up to the daily chart, once we lose that level at 26.2, you have a big gap to fill all the way down to 25. There's very little support because remember, on this day here on the 17th of March, we had a big candlestick jumping us straight through a bunch of different levels. So when you fall, there's very little support to the downside as well. Okay, so if we lose 26.2, expect 25k, and then expect support to be coming in from the weekly EMA ribbon, which we're going to be coming on to shortly. Now, the other reason that it was so obvious yesterday when we looked at what was going on was we were running into our EMA ribbon, right? If you're taking long trades running into your EMA ribbon against trend, you're asking yourself to get wrecked. Now, I'm working on compiling a checklist for you guys. I'm going to put together a checklist, like a pre-trade checklist, which you can go through to make sure you're not wrecking yourself. Are you trading against the trend? Is your stop loss intact? Is this intact? It's going to be like a checklist that before you place any trade, make sure you tick all of them and then place your trade. I will get that set up and let you know when that's ready. So this is important. You're going into your EMA ribbon. Why are you taking a long trade here? So, right, all of these were the flags that were warning us yesterday. Now, the other thing we have to be very, very wary of is the FOMC minutes. Now, it's important that we understand that these are just minutes from the FOMC. So if I jump on over to my Twitter page, I did tweet this earlier. You guys need to be wary of this. This is not an FOMC meeting. I always see people get this confused. It's the meeting minutes from the last meeting. Nonetheless, it can move markets. We have to pay attention to it. And if there is anything critical, I will bring you those updates right away. So with that said, what are the key levels that we're looking at here? Well, once we lose our EMA ribbon, where is the next major support? One thing you can look at is the 200 moving average. And if you bring out your 200 moving average, you will see that that sits all the way down here in the white at 22.6. That's a painful drop. If you look at your exponential moving average, your 200 period exponential moving average, that brings you to 24.9. Now the 24.9 level still has a little bit, just a little bit of bullish hope if we need to fall down to there. And the reason for that is that's the final straws of our weekly EMA ribbon, right? We can cope with coming just down to here and then bouncing. Anything below then, we fall below our weekly EMA ribbon, and then we need to get ourselves ready for some potential pain. Until then, we still have hope that we can bounce in this direction here. Just like we had a move here, we consolidated, we moved, we consolidate, we move. We're still in play for that move, but the macroeconomic uncertainty needs to start to come into the right direction. And what we can see so far is we're not seeing that. Part of the pain we've seen is this. 32% of the market now has priced in that we're going to get a rate hike. And this is why you're seeing a lot of pain in the market, along with the debt ceiling woes. Not many people are talking about this. Previously, when the last FOMC meeting was done, everybody was like, that's it. No more rate hikes. And pretty much this bar at the top here was priced in at almost 100%, 90% plus, right? Now you're seeing that unwind. Now 30% of the market is saying, hang on a second, we're going to need another rate hike, aren't we? So that's having an impact on markets. Now, in order to aid this decision, we get PCE inflation figures on Friday, which is the Fed's preferred measure of inflation. Then on June the 13th, the day before this meeting on the 14th, the new CPI data comes out. Jerome Powell's going to be using those pieces of data to decide on the 14th if he's going to hike again or if he's going to pause. Now, the problem the Fed has is as follows. If they decide to pause and then they figure out, we need to raise rates again, that's going to be a big problem. They're going to lack credibility and the markets are not going to believe anything that Jerome Powell, the Fed, says. So they need to get this right. Either they do one more rate hike and then pause at the next meeting, which is July the 26th, or they pause and they're done. They then need to plan on how long are they going to stay at these rates for, 5%, and when are they going to start coming back down. Okay, but this is why we're seeing pain in the market, because the market is saying, hang on a second, we're going risk off, mate. We are going risk off. We do not trust what's going on. So that's what we're seeing short term. But we need to zoom out, guys, because a lot of people are starting to feel really down in this boring market. And you need to remind yourself, what is going on right now? Where are we in the great scheme of things? So I pulled this chart out from Glassnode. I'll leave a link in the description if any of you want to sign up to Glassnode. If you're a bit more of a professional trader and you want these insights and a dashboard of on-chain metrics, I find it really useful. I do use it, and you guys know we mention it in the videos here as well. But what I want to show you here is this. This is the adjusted MVRV score. So think about it as realized profit or loss. Now, there are two key levels I want you to focus on. The bottom one is the pink one. The pink level there shows you a level of 32% unrealized loss. So 32% of the market are in an unrealized loss. So on paper, if they were to sell their Bitcoin, they would sell at a 32% loss. Now, the green line shows you a 9% unrealized profit. So the majority of the market is in profit at 9%. Now, when we went for our 2018 bear market, we hovered around the green line, the 9% profitability, for quite a while. And then boom, dumped down to the 32% unrealized loss level. And that's where you really did come down to your lows here of $4,000 on Bitcoin, right? That was the pinnacle of that bear market, right at the bottom here in the depths of it. And then you saw your run up to 13, you saw it come back down again, and then eventually it went to 64,000 and the rest is history. But look at 2019. Similarly, when it came down, you saw 2019, it came back at this 9% mark and chilled there for a bit. During the pandemic, it came back to that level and even nearly touched that 32% unrealized loss level again. So now let's fast forward into what we've got going on here. We've seen the same thing. We were hovering around the 9% mark. We dropped down as the price fell as well. So let's just zoom out so you can see as the price of Bitcoin fell here. Move me out the way, you go over there, mate. And you can see we then fell back down to the 32% unrealized loss. And we were there for a very long time throughout the Sam Bankman-Fried drama, Terra Luna drama. We were sitting here at 32% unrealized loss on the pink line. Now we're starting to find our way back up. Now we're holding base at 9% unrealized loss. And it's even gone higher than this in moments. But roughly, we're sitting at that 9% unrealized loss level, which shows that we're in a better place than we were. And I think a lot of people are forgetting that right now. Another thing I want to show you, which shows that we're in a healthy place right now, is look at the hodlers. Look at the supply last active. So the pink line at the top is supply last active 1+ year ago. 68% of supply was last active over a year ago. 54% of the supply was last active over 2 years ago. It hasn't moved for 2 years. Supply active 3 years ago, 40%. Guys, come on. 40% of this has not moved for 3 years. It's been hibernating. People are hodling Bitcoin, and that's what you're noticing. They're hodling over the year time frame, they've hodled 2 years, and the 3 years, and 5 years. Almost 30% of the supply has not moved in 5 years. That is incredible. They did not sell at 68,000, 69,000. They held. They held up to 69,000. They held all the way down to those levels as well. This is incredible. They've held Bitcoin from single-digit thousands and less. It went up to 68,000, 69,000. They didn't sell. It went all the way down to 15,000. They did not sell, right? These are people holding, and that's what we're seeing. So you can fight the small minutiae, but the long-term trend here is showing that we are in a better place right now. Things are starting to look up. Now, some of the fears around, the economy and will things continue to get worse, that's what's worrying the market right now. But is it warranted just yet? No, right? Inflation is cooling down. We are getting to the end of this rate hike cycle, in my opinion. Are we managing to avert a recession? That's yet to be seen. But this debt ceiling crisis seems to be giving us a little bit of uncertainty here, stopping us from moving to the upside. So jumping back into the charts, just to round this off again, the dollar index, remember, is inversely correlated to Bitcoin. This dollar index is having a positive 3 weeks here. It's having its moment, right? It had a horrible period here from you can see here in January, it had a nice big move and got rejected from its EMA ribbon. So from this period towards the end of Feb, it's just had horrible weeks to the downside. Now it's consolidating into its EMA ribbon, and granted, when that happens, that means Bitcoin needs to go down into its EMA ribbon. And that's what we're seeing right now. As the dollar index goes to test its EMA ribbon from the bottom side, Bitcoin's coming to test its EMA ribbon from the top side. And the critical decision is going to be, will Bitcoin lose its EMA ribbon? Will dollar index regain its weekly EMA ribbon? Because that could spell a longer term pain period. Until then, until that happens, it's just a pullback. It's a pullback after a big, exhaustive move on Bitcoin that took us from these levels here. I mean, from these levels at 15,500 up towards 31,000 where we got rejected, right? You're going to expect pullback. You do not just see big straight green candles to the upside. No, this is very steep, guys. That's a very steep climb we've had here since the turn of the new year here in 2023. And this is a healthy pullback. Where you can start to worry is if we break trend and start trending in this direction, then of course we have to start worrying about these levels here. Will we fall below 21,000? Will we need to come back down to 17, 18,000? Those come into play. But just to shout those numbers out now are not helpful because we still have our EMA ribbon. We're still holding trend here on the longer time frame, and we need to be patient. Guys, if you appreciate this update, smash the likes. Don't forget to subscribe. Check out the links in the description to Bybit or Mexi if you want to trade in these moves. Thanks for watching, and I'll see you in the next one.